everybody, Peter Belligus here for the Unusual Financial Questions Show, where we answer your uncommon economic inquiries and try to solve your money mysteries. Today's question is about life insurance. Now, I get a lot of questions about life insurance, like how much do I need? What's better, term insurance or permanent insurance? And do I even need life insurance at all? Now, those are all good questions, but on this show, we want to step off that everyday path. Here's a question about life insurance that I don't get a lot, but I know a lot of people are wondering about. What happens if I lie on my life insurance application? Let's say I state on my application that I'm a non-smoker, when I actually am. If I die, will the life insurance company refuse to pay out my policy? In other words, if you lie and you die, will they deny? Well, the answer is it depends. A life insurance policy is, at base, a contract. Lying on any contract can be construed as fraud, and that's illegal. So don't lie. But I realize that some of you want to ask the question behind the question. Like Peter, I'm not a smoker, but I might have possibly, allegedly, accidentally, gone to a bachelor party in Vegas, and at the aforesaid soiree, I might have possibly, allegedly, accidentally partaken in some medicinal products that caused temporary memory loss. And all I can tell you is I woke up 2 days later in a dumpster wearing a clown suit with a tattoo across my chest that read, "How can a prospective employer ever verify that you actually worked for Kaiser Soze?" The life insurance application is asking me, have I used any tobacco products or drugs in the last 2 years? What do I say? Is one cigar at one bachelor party going to forever increase the cost of my life insurance? If so, that was a pretty expensive cigar. I get it. People are nervous about what they put down for answers on a life insurance application, and they have a right to be a little nervous. When you apply for a life insurance policy, here's what actually happens. You fill out an application. On that application, in the fine print that no one ever reads, you give the life insurance company the right to pull your records. So tip number 1, if there's a record of it, don't lie about it. They will find it. This includes medical records, criminal records, and here's the one you haven't thought of: social media records. Imagine you say on your life insurance application that you are not a scuba diver, but then you die in a scuba diving accident. Well, that's okay. I mean, it sucks that you're dead, but from a life insurance perspective, if something was true at the time of application, but then changed after the application, like you weren't a scuba diver when you applied for life insurance, but you took up scuba diving a few months later, and then you died in a scuba diving accident, well, that doesn't mean the life insurance company will deny your claim. But if they find a bunch of social media photos of you scuba diving posted before you applied, well, they will probably deny if you die in a scuba diving accident. Tip number 2, don't deliberately put something into your records. Don't go get a battery of medical tests right before you apply for life insurance. Now, if you need to go see a doctor, obviously go see a doctor. But if you have your annual physical and blood test in 3 months, get that life insurance application in now before those tests. Also, be careful what you post online. Posts of you ziplining, rock climbing, skydiving, scuba diving, that's probably not going to help your application. After you submit your application, the life insurance company is going to go one of 2 ways. Number 1, they may approve you. Some life insurance companies have software that is so good they can approve a small portion of people online immediately without ever going one step further. But if they need to go one step further, they may check your medical records, or they may also ask for a physical examination. This entails a nurse coming to your home or your office. The nurse will come to your home or your office and check your blood pressure, your height, your weight, and will probably take a blood and urine sample. After the nurse's visit, the life insurance company will decide whether to approve or deny your life insurance application. Now, if they approve you, they don't just approve you. They actually approve you for a certain class. Most insurance companies sort people into one of 4 classes: super preferred or preferred plus, preferred, standard, or substandard. Now, a person in any one of these classes can be approved for life insurance. All the classes do is determine the premium, or the monthly cost of your policy. Obviously, the healthiest people, who are employed in the safest professions like office work, are put into the preferred and super preferred classes, and those people pay the lowest premiums. But the chain-smoking diabetic sword juggler, well, he is going to be in the standard or substandard class, and he's going to have some pretty expensive premiums. So the more bad news on your life insurance application, the more likely you are to be put in a class that will demand higher premiums. That is why it can be tempting to lie. Bad news literally equals money out of your pocket. So what happens if you lie? If you lie, then you die. Will they deny? Well, the answer depends on three major things. Number one, the death benefit of the policy. The larger the death benefit, the more closely the life insurance company is going to look into what you put on your application. A smaller policy of $1 million or under is probably not going to raise any eyebrows. Any policy over $5 million, however, is going to get some serious scrutiny. Number two, they look at the cause of death. If you're a smoker and you lie and say that you're a non-smoker and then you die of a heart attack, well, they might deny your claim. But if you are a smoker and you lie about it and then you die in a plane crash, well, it'd be hard for the life insurance company to argue that it was smoking that killed you. Number three, and here's the big one, the life insurance company looks very closely at the date of death in relation to the day the policy was purchased. There is a term for this period of time in the life insurance world, and it is known as the contestability period. This period of time is typically 2 years. During those 2 years, the insurance company will look very closely at any death that occurred. They will look at the application and the cause of death to ensure that the policy was not purchased as a hedge against an expected death. Now, this doesn't mean the insurance company will deny. They will simply open an investigation to verify that the items that you put on your application were true. If the cause of death is something overly obvious, like a plane crash, well, there won't be any problems. But if it is something like a heart attack or cancer, they will look a bit closer. If they can establish that you knew something in advance about your likelihood of dying, they may deny the policy. But outright denying the policy is only one of three options the life insurance company has. So number one, they can deny you. Number two, they can pay out. Remember, the life insurance company doesn't want a lawsuit and they don't want the bad publicity, so they may actually just pay out. Or number three, they can retroactively raise your premiums. If you lied and said you were a non-smoker, you probably would have been put in a better class like Preferred Plus. As a Preferred Plus person, your premiums might have been, say, $100 per month, depending on your age and the size of the policy. But a smoker would have been categorized as standard or even substandard and may have had to pay $200 per month. The insurance company might still pay out, but they will take out of that payout the additional $100 a month for every month that you had the policy. In other words, they will take the premiums you should have been paying since the beginning, had you been honest. But here's the good news. Once the contestability period has passed, which is typically 2 years, then a denial is very unlikely. More than any other item, crossing that contestability period is the most important factor to avoiding a denial. Couple final thoughts on life insurance. Number one, each year you age, the premium on a life insurance policy increases about 3 to 5%. So a 25-year-old might pay $100 a month, while a 26-year-old will pay $103 per month, and so on. Number two, this is the one that no one outside the life insurance world knows about. The premiums of your life insurance policy are based on the age you will be 6 months from the application date. So if you're currently 30, but you're going to be 31 in 6 months, then they will price the policy as if you're already 31. Number three, with every passing year, your body is exposed to the chance that you might get an unfavorable medical diagnosis, like cancer. Some diagnoses will literally make you uninsurable. So if you know you will need life insurance one day, it is worth looking into it now. So how do you know if you need life insurance? Well, if you answer yes to at least one of these three questions, you need life insurance. Question number one, is there now or will there be in the future someone who will depend on my income or my ability to provide pro bono services? If you have kids, they depend on your income. If you're a stay-at-home dad, you probably don't have an income, but your kids and your spouse or partner do depend on the pro bono services you provide, such as cleaning, cooking, childcare, and assembling complicated toys the night before your kid's birthday. Question number two, is there now or will there be in the future an heir of my estate who will need a large amount of cash to pay the taxes on my estate so they don't have to sell anything? Life insurance is also used to pay estate taxes, those taxes that you have to pay on the value of your stuff after you die. Now, most people don't need to do this, but if you have a valuable business, I'm not sure what business that is, but if you want your family business to remain in the family and not be sold just to pay the estate taxes, life insurance is one possible solution. And the final question, do you want to truly balance your retirement portfolio? This is the one that most people don't consider because they think they have a balanced portfolio. These folks think they are diversified because they have stocks, bonds, and some kind of real estate, like their home, a rental property, or a real estate mutual fund, aka a REIT. Now, a portfolio of this looks balanced, but it's actually not. While this portfolio is made up of several different investments, it is a portfolio consisting 100% of investments. That means that 100% of this portfolio is exposed to the markets, whether it is the bond market, the stock market, or the real estate market. A lot of financial advisors don't want to talk about this, but a truly balanced portfolio consists of items from the investment world and the insurance world. Each of these worlds has their advantages and disadvantages. For example, the financial world is great for growth, but it can be challenging to create long-term income. The insurance world is great at creating income, but it sometimes struggles with growth. Now, the people who sell you investments will tell you the investments are great, and that's all you need. And the people who sell insurance will tell you insurance is great, and that's all you need. I'm here to say that insurance and investments are both great at different things. While many people starting out in their professional careers are purchasing investments, usually through their retirement plan, few people consider incorporating life insurance into their portfolio. So if someone depends, number one, on your income or your pro bono work, or if you're trying to, number two, protect a business from estate taxes, or number three, if there are zero insurance products in your portfolio, you may want to look into life insurance. Just remember, when you do fill out that application, don't lie. If you enjoyed this episode of the Unusual Financial Questions Show, please go ahead and hit the like button. And if you have an unusual financial question you want me to answer, please let me know in the comments below. I'm Peter Billigus, and thanks for watching.